In the tapestry of life, where every thread holds a story, America in Black and White emerges as a haven for the voices echoing through the heart of our communities. In this podcast, we wade through the rivers of our collective experiences, celebrating the vibrant hues of change brought forth by the whispers of hope and the roars of action. It's more than just a conversation. It's a journey into the heart of our society, illuminated by the light of those daring to dream and do. Join us, and let your voice be the melody that guides us toward a dawn where every color finds its place in the masterpiece of our shared destiny. Together, let's paint a future brimming with the positives that dwell in our minds and the actions that shape our world.
Good evening, ladies and gentlemen, and welcome to another episode of America in Black and White, where we are coloring conversations on America's canvas. Tonight, our special guest is Kamar Jones. Kamar Jones is the founder and managing partner of PPI Capital. For all of you watching this episode tonight, believe me, you want to watch this episode because you're about to learn some things about how you can get started in growing by investing your money in the segment of the markets that could be very safe for you, but could also be very good for you. Kamar Jones is the founding and managing partner of PPI Capital, a private equity firm based in Atlanta, Georgia, focused on acquiring and scaling junior mining companies. With a disciplined investment strategy and hands-on operational leadership, PPI Capital delivers valued and enhancing assets, performance, and executing targeted exits, often within 18 months, driving significant returns for investors. Kamar brings over 2 decades of experience across management consulting and capital markets. He spent 20 years in the management consulting sector, where he led high-impact engagements generating over $500 million in measurable benefits for clients. His work spans manufacturing, mining, oil and gas, and pharmaceuticals, with a focus on sales effectiveness, commercial strategy, operations, maintenance, and reliability, procurement, logistics, and warehousing. His results-driven approach has helped transform some of the most operational complex businesses globally. Before his consulting career, Kamar spent 8 years in capital markets developing deep expertise in financial structuring, equity markets, and strategic investment analysis. These experiences laid the groundwork for his work in private equity, where he combines strategic acumen with operational execution. Kamar also served as a U.S. Army officer, where he developed leadership, discipline, and mission-driven thinking that continues to define his approach to business. In addition to his role at PPI Capital, Kamar currently serves on the board of directors of Palangio Exploration Incorporation, a gold exploration company publicly traded on the Toronto Stock Exchange, the TSX. Since his appointment, Palangio's share price has increased fourfold, reflecting strong strategic progress and renewed investor confidence. In his personal life, Kamar lives in the Buckhead area of Atlanta, Georgia, with his wife. Together, they have 4 children and 4 grandchildren, and they enjoy the company of their loyal family dog. Outside of business, Kamar is dedicated to family mentorship and building legacy through leadership and service. Ladies and gentlemen, I'd like to introduce you all to Mr. Kamar Jones.
Hello, Charles. Thank you. Thank you for the introduction. I'm humbled to be here, and I'm looking forward to talking to many of your viewers and then some people that may be viewing that know me. So hello, everyone, and thank you again, Charles. Excited to be here.
You're very welcome. Is there anything you'd like to add to your bio before we get into the show?
I want to mention one thing. The bio. I needed to update the performance of Palangio Exploration Inc. It's now up 8 times since I
Oh, wow.
started. So yeah, it's been really exciting times there, and we expect even more increase in the valuation over time of what we're doing at Palangio. So excited to see that as well.
Oh, wow. That's definitely excellent. Um, we want to start off. I want to start off first where I want to jump into the entrepreneurship part of your personal drive here. And can you tell us what inspired you to take the leap into entrepreneurship?
Thank you. Well, I mean, it's like anything. Sometimes these things it just happen, and I have to credit back all the experience that you said. I just didn't wake up and get here and could get into private equity in the mining sector. It's kind of a it's not a lot of us that do this, obviously. So the journey started when I was a young man in my early 20s. I worked at Merrill Lynch and some big names like that, where I got introduced to capital markets. I hold a degree, a bachelor's degree in finance and an MBA in international business. But so I spent 8 years working in that, understanding financial instruments, understanding analysis, understanding how Wall Street works. And that essentially set me up for my next phase of my career, which was management consulting. Um, Going into management consulting, that's where you solve problems. What we primarily did was you're working with large Fortune 100, Fortune 500 companies, consulting them to get operational improvements that generate a tangible benefit. And what that means essentially is working with the company's current assets and capabilities, not requiring or recommending any additional capital to buy machines or software or anything like that. Essentially, working with what they have in order to get improvements. And like you had mentioned, throughout that time, I estimate that directly projects that I was directly involved in, about a half a billion in tangible benefits to these clients. Surprisingly, with my background, I spent a lot of time early on and got introduced to the mining sector, which which is completely different than anything I had did prior to me coming into management consulting, and actually was able to get a knack at it. Um, did some good work and was asked to join other projects. And eventually you start really understanding the business, what the challenges are, and you get pretty good at it. With that being said, that allowed me to make some long-term relationships with people in that sector. And a person that I work with that's a partner that also sits on my advisory board, we had a project together. uh, we had a very successful project. Was able to get an increase in throughput between two mine sites in Greece, 42% plus on one site and 15% plus on the other within a 6 month time frame. And we continued to stay in touch with each other. And then we found an opportunity that we can work together with 5 years later. And that's really how this got launched. We launched a portfolio before PPI Capital, and that was a tremendous success. And roughly about a year and a half later, we launched PPI Capital, or I was helped to launch PPI Capital, where I ran that. And our primary objective is to get more of the American market into this sector that I believe and know that is critical and essential to developing not only alternative energy sources, uh, infrastructure globally, and any of the other products that are out there that are used that are cool, such as computers, cell phones, um, buildings, new structures, all those kind of things, you need the mining sector. And so I believe that when the American market actually gets and wakes up, which it's starting to do, I think this will be a tremendous opportunity for investors to get significant gains on their money.
So, did you grow up with examples of business ownership, or did you blaze your own trail?
Man, I wish. I mean, my father. I mean, he always inspired to open up his own business, and I was having this conversation today, and he eventually did with the hair salon much later in life. But my father made a lot of sacrifices for me, and I try to take advantage of the sacrifices that he made. My father was a career military enlisted man, and part of what he did was he did this so he could support his family and raise his child and get us out of Philadelphia, um, which is a tough area to come from. I'm from deep in Philadelphia, not the suburbs or anything like that, and made the sacrifice on his aspirations, career ambitions, and everything else, and also his body. He also sacrificed that too as well for me to be able to do these things that I'm doing now. And as a young man, I had a critical path that I had to make a decision. Do I go and be a career military officer, or do I go into business? And the talk he had with me, he recommended that I go into business because of just grades, things like that. And so, I credit him along with my mother too. She's one of my biggest champions, and my wife. But no, I did not. I didn't have any examples of people doing things like this. I didn't come from money. Uh, my father was a sergeant in the military, and my mother at the time, before she became a beauty salon technician, worked at a bank as a teller. And so uh, both didn't have college degrees, any of that. So I truly got involved with this when I got to be a stockbroker at firms like Merrill Lynch, got introduced to capital markets, and continued to try to build my knowledge, acumen, and contacts networks to be able to do what I'm doing now. And it's still learning and process. It's still a process, and we still got a long way to go.
Mm. So with that foundation, because it still sounds like you had a solid foundation
Oh,
around.
absolutely.
And so with that foundation, I mean, did it inspire you to actually to think one day as to what that long range plan was going to be for you that got you to this point?
Yeah, it sort of did. I think, again, with starting with firms like Merrill Lynch, knows I knew that I wanted to be, I would love to have been a portfolio manager. And at the time, it's trying to, how do you get there? And it didn't really know. So worked in that industry, like I said, for 8 years, and went to management consulting, where I got to introduce to really understand how business works, how companies are in distress, and how you turn those around. And so that experience, coupled with the capital market experience, and then coupled with the solid foundation that you mentioned of my parents, the love and support of my wife, and children, the, believe it or not, seeing Eddie Murphy in Trading Places, that is what inspired me, believe it or not, to even go into capital markets, even though it was commodities. But it's kind of weird because commodities now and kind of in commodities, but in a different way. So seeing images of people, even if they're fictional, and it clearly was, can inspire young people to achieve and do different things. And so that's kind of how I try to live my life and lead by example, to show that you can do this. There's mentors that I have out there. It'd be a long list of different people that have inspired me, and I don't want to miss mentioning anyone, so I won't. But a lot of these people know who they are. I think, don't underestimate that. That's what I would tell anyone. Don't underestimate the influence that you can have on people, even if you're not speaking with them or know them or talking to them.
Mm. That makes so much sense there. It really does. And I don't think a lot of people actually realize that until it's a little bit too late.
Yeah. Maybe it's never too late. I mean, gotten to this, I'm 52 years old now.
Mhm.
It's never too late to start something, but I think the timing's right. All the experience I got, the blood, sweat, and tears that you go through, uh, all these kind of things get you to the point. And like I said, it's still work in progress. It's still a lot of work to do. And so I'll continue the journey.
So, what was your first entrepreneurial venture, and what did you learn from it?
Yeah, that's a good question. The first time I actually went had an entrepreneurial venture was in my late 20s, and I started buying rental property, um,
Okay.
and got pretty good at it. I mean, it was eventually acquired 65 rental units,
Oh, wow.
and at the time, it enabled me to be able to walk away from uh, working full time at some of these larger firms. Now, unfortunately, and this is what life does sometimes, is that I had a bitter divorce, and a lot of that got away from me, and so I had to humble myself, start it over, and that's how I actually entered into the management consulting space.
Mhm.
And then I met my wife that I'm with now, that we've just celebrated an 18-year anniversary that we have. And she's been by me thick and thin throughout that time frame. So um, that was the first venture I had. I went in and made some other investments into uh, upscale barbershop during that time, car dealership, which I'll never do again. I could commend any of those guys that could do that. If I was, I'd be a silent partner and stay out. You talk about learning a lot of harsh lessons there. But I've always been fascinated by investments and making investments, and these are all sort of alternative investments. And then when my wife and I got together, she's done some ventures. She's had a couple of hair salons where she had one, sold one, then got a significant one where she had 20 hairstylists and a split nail salon as well. And so that was doing quite well until at some point she had a difficult time because she had lost her mother, and the focus got away a little bit. And so that had to be divested. And so I've always made money in real estate. And actually, when you look at the mining space and what we're doing at PPI Capital and some of our associates and partners, it's essentially similar to that, except it's a little bit more complex and has higher barriers of entry to get into
Wow. Um, so, how do you stay resilient when the business landscapes get tough?
it. Well, first of all, I already understand that it's going to get tough. And like I said, some of the things I've been through uh, prepared me for the tough times. It's going to be a lot of rejection, especially when you're in the business of private equity. You're raising money. We got out of our first round, uh, and I'll be making a formal announcement of that. But we've got enough subscriptions so I can close the first round, which is the founders round, and we're going to be pushing into the second round. But getting that push, it's going to be a lot of rejection. It's going to be a
Mhm.
lot of people that don't believe in you. It's going to be a lot of people that tell you, well, I'm going to do something else, whatever it may be. And you just have to stay focused, keep your eye on where you're going, and understand and believe that you can do it. And you can't allow any distractions out there to get you off track. No matter what it is, you got to stay persistent and keep pushing ahead. And then sometimes you're going to have setbacks, and that's okay. You understand that. But as long as you're still pushing the ball forward, and that's what I would advise anybody to think of when you're going through these. Everybody's going through it. Read books on different people. Steve Schwartzman, who started Blackstone which is a major, one of the largest private equity firms in the world. First one to go over $1 trillion in assets. Uh, this guy went through a lot, even with the experience that he had on Wall Street at top Wall Street firms. Uh, Showed up to a meeting and the people wasn't even there. He flew somewhere, he wasn't even there, and it was raining. And so I read that book and can see what even a guy like that went through. And even though he wanted to quit at one point, and it got pretty rocky. So even if a person that skilled and that connected and had all the right degrees, Ivy League pedigree, all those things, and was still going through these types of things and can achieve that kind of greatness, if I can get a fraction of the results that Blackstone has, I think I'll be pretty pleased with myself.
You know,
He's also a Philadelphia native as well, so that inspired me too. That guy is another guy that's inspirational as well, Charles.
Well, you know, you are the perfect example of resilience. You know, you had this situation there with your rental properties, and then you think about when you look at this situation here and how that went. Can you tell our audience how is it that you stayed so strong and so focused through those situations to get here right now?
Thank you. Yeah. One of the things is, and I'm going to use an analogy, and hopefully that'll help people think about it. If you think about making a sword, right? Swords, to make them nice and polished, and let's talk about a samurai sword, because those have a lot of pristine, and they're very sharp and more of a finesse type weapon. You have to constantly bend the metal, constantly apply heat to it, and bang on it, bang on it, and then keep repeating the process. Heat, bend, bang, flatten out, and you're constantly doing that over and over again. And what does that do, Charles? That makes the blade sharp. It makes the steel tough. However, you have to go through all that banging and heat and pressure and everything else. And see, that's the process that people don't see when you look at a samurai sword. All you see is the end product. And I think that most of the time, when you're trying to do or achieve certain things, you go through that bending and heat and pressure and everything else. And people don't necessarily see that. And if they do see it, they say, what in the heck are you doing to yourself? And sometimes you think, what in the heck am I doing to myself? I need to get out of this heat, stop taking this pounding. But what I can just stay focused on and say, and that's why you should read books, talk to different people, talk to certain positive people that have done these sort of things, get mentorship, all these kind of things you need to do so they can keep you focused to understand that this is part of the process. It's not going to be an easy journey. It's going to be a difficult journey. And you keep making the blade sharper and sharper. Even when it's used, you still have to continue to keep maintenance on it and polish it and keep the blade sharp when it's used, because it's going to get dull. And so the learning and the pounding and everything else will continue on and on throughout the journey. And as long as you can remember that, you'll stay focused and understand that this is normal and it's going to happen. If it was easy, then everyone would be doing it. And that's what you got to keep. That's what I would tell everybody. Anything that you're doing, you can do it. There's going to be laughing at you, tell you can't do it. Secretly behind the scenes, don't want you to be able to do it. You got to be able to recognize those people, and then you got to surround yourself with the positive people that have done these kind of things, or your support system that can get you through it. And so that would be my advice when you're going through, and you will go through these things, is to keep that focus.
So, how has your identity shaped your entrepreneurial journey?
Well, I think that's a good question. I think, again, my upbringing. Again, to credit my parents again. growing up, I never was told you couldn't do anything. And I have a mentor that said he hasn't met my parents yet. And he said, I really want to meet them because you have this can-do attitude. It's like you don't believe that there's any limitations to what you can do. And trust me, there's people out there that will tell you you can't do it. And I've had that happen my whole life. Can't be a stockbroker. Black people don't do that. They're not. Can't be a military officer. You don't have what it takes to do that. Can't go to college. All these things. You can't do this. You can't do that. And I've always learned that as long as you believe in it in here, you don't listen to these people. Mm-hmm. You take it in. You don't let them know that it aggravates you, but you continue to move forward and do what you got to do. And the best revenge is to prove these people wrong. Mm-hmm. That can motivate you as well. So I would say being raised in a can-do attitude, being a military brat, seeing and experiencing different people, different cultures, even as a young person, prepared me to be able to be and relate to different people in different parts of the country, being able to consult people to where I built relationships like with one of the guys and his partners that I have with that's a friend as well. Being able to relate to those kind of folks, consulting in 6 different continents in the world, except for Antarctica, which I don't plan to do. All these things, working at Merrill, being the only African-American and the youngest broker in that office, and seeing Confederate flags at the time in there the first week of work, but still able to talk with some of these people and earning their respect. All these things and meeting different bankers and people that have influenced my life, learning from what not to do, what to do, making mistakes, losing money, all of these kind of things. If you think that you can go through doing certain things and not have failures, it's not going to happen. And it's funny, let's talking about failures. You learn from having failures. Mm-hmm. And that's what people got to remember. The best organizations in the world are what's called learning environments. Mm-hmm. And learning environments encourage making mistakes because that's the best way you learn. Mm-hmm. And if you're in an environment where you can't make mistakes and you're beaten up when you make mistakes, you're never going to take any risk. You're never going to come up with any ideas. You're just going to play it safe and get along to get along. Mm-hmm. And so all of these experiences, and it continues to be experienced and constantly reading and learning about different things to shape my life and get better. I'm always trying to get better.
So what does innovation mean to you in your industry?
Innovation, and that's a good question. The mining industry is very traditional. It would be classified as old economy. Mm-hmm. And it's some things that we're working with and developing with business partners now, which is a new way to do mining exploration that is taken and incorporating artificial intelligence, which is a big buzzword these days and is rapidly starting to become part of the way we do business. And I can't go into too much detail as to how that's working, but the bottom line is this process that we're developing, or it has been developed, that's starting to be implemented. And that's part of how the process of how we can increase intrinsic value to companies that we invest into can significantly reduce the exploration costs. And to the audience out there that's not familiar with mining, exploration, all that is before you actually extract minerals or start getting minerals out of the ground, you have to construct a mine. And even before that, you have to explore the area, which means that you have to prove through data and scientific studies that you have a certain amount of minerals underneath the ground. You have to be able to quantify that. And then you also have to quantify if it's economically viable. Mm-hmm. And there's a lot of studies, and it costs a lot of money to do this. And so bringing and applying this new technology will make significant gains to already what we're doing, because we know what we're doing and have done this for so long. That's going to enhance even more our offering and our value proposition. And I'm very excited about that. That's new in the development on top of what we're already doing. And our business partners probably say, man, I haven't even heard of that yet. Or people that are working with me as we build the team at PPI, they haven't even heard of that yet because it's right now we can't disclose too much of it. But that's the end game as to what it will produce.
So, if you could give your younger self one entrepreneurial truth, what would it be?
I think, again, when you're doing business with people, if you can't trust them, I don't care how lucrative it is. I don't care what's promised or anything. Don't get involved in it. Just back off, back away.
Ashe.
I don't care if you've got legal documents or any of that, because unethical people are going to do unethical things. They don't care if you got a legal document or not. So part of, I think, building trust and integrity, or having integrity and building trust in relationships, is number one. And one of the things I also promised to never get involved in, and I've been approached with this before, I'm not putting money into alcohol, like liquor stores, stuff like that, check cashing places, sex industry, strip clubs, all that kind of stuff. Not getting involved in it, don't care how lucrative it is, because it has a negative impact mainly on our communities. And you know what I'm talking about. We have enough of that already. And so there's other ways that you can make money and be able to sleep at night and have integrity. So, and I can say with confidence, because my investments and things I'm involved with, I don't own mutual funds, so no telling what those guys are doing. I know what I'm doing, and I control that more. And I can say with a guarantee that PPI would never or will never invest in any of those kind of things. And I don't care how much returns it is, or prisons neither. Not doing that neither. None of that.
So let's transition over to why alternative investments matter. First of all, can you tell us what first drew you to alternative investments?
Okay. And let me just define what an alternative investment is too, because a lot of times people don't understand. So,
okay,
alternative investments, just like how it sounds, it's alternative. It's not your traditional stocks, bonds, mutual funds, some of those types of securities that most people are invested into, savings accounts, CDs, et cetera. Alternative investments are investments that are none of those, and more like real estate, businesses, and private equity or venture capital, some of those kind of things. And so what drew me to that is, again, my business partner, who's a brilliant guy, by the way, and very brilliant. And I can't give him enough credit, but he came up with this idea to start up these, and I've always had that in the back of my head, and I've always been involved in alternative investments. They produce the most returns, and they produce what I would consider a cash flow. See, because what you need in order to retire is cash flow. And if you think about it, most of the investment strategies out there get you to buy into something, hope and pray it goes up, and it works. But then what do you do when you get to the end of the rope, when you're trying to retire? You must sell off those assets in order to live. And if you think about it, you don't sell things that are producing money. And you don't, because eventually you may run out of money. And so you need income, and you will always need income. And so alternative investments produce income. There's nothing wrong with having these other investments, and you should. And you need them sometime to get started and springboard it into these others to get you the net worth that you need to get to in order to do these if you're not running it or starting it yourself. Another thing I've looked at once I really started looking into it and then later in life, when you look at ultra high net worth individuals, and I'm talking about people that have got 30, 40, $50 million in net worth, half of their net worth is in alternative investments. So the richest people and the wealthiest people are not investing the same as the people that's trying to make some wealth so they can retire. And in fact, rich people and high net worth individuals that are like that are not investing to retire. They're never going to retire because they're usually going to do something that they enjoy doing, and their primary goal is to leave a legacy after they pass away, not to just retire anymore. And so that attracted me because that's the lifestyle that I want to have when I'm doing something. And I already are doing things that I love. I'm fortunate and lucky and blessed to be able to do things that I really enjoy doing. And so, and if you think about it, Charles, if you look at senators, you look at certain business people, these people are still working well beyond retirement years because they enjoy what they're doing. And so that's what attracted me to it. I think it's starting to increase more and more, and it's becoming more and more part of people's portfolio. Now, I'm not saying that you should take 50% of your holdings and go into alternative investments. I do believe you should have maybe 5 to 10%. And that's what I encourage people to do that qualify. And we can talk about that a little later. You have to, everybody can't get involved in alternative investments from an investor standpoint. And that's the unfortunate part, but it's designed that way because alternative investments are typically classified as more riskier. It has less paperwork and legal documents. And so you have to be able to do your own due diligence or have the means and capability to do your own due diligence. And so unfortunately, many investors are not given the opportunity to invest into these types of investments. That's sort of like the downside to it. Anybody can start up one and do it, which is hard to do, but can be done. But not everyone can be just a passive investor into these.
So when you mention alternative investments equal cash flow, can you tell us how does liquidity play its part in that formula?
Thank you. Thank you for saying that. So most of the time, alternative investments don't have the same liquidity that some of the traditional investments have. Traditional investments usually you can get the cash within 3 days. You can sell it, get the cash quickly. Another thing too is that the valuations are much more. There's much more confidence in the valuations of some of the securities that are not alternative investments because they're more highly regulated. They mark them to market usually on a daily basis as long as markets are open, and so therefore you have that liquidity and price certainty. Whereas alternative investments, you can put a valuation on it, but it doesn't always necessarily mean that that's what the value will be. You still have to sell it, like a real estate investment. You may have an appraisal, or appraise it, but you still have to put it on the market and sell it. More of a better example is everybody understands sports, and I'll throw this out there to my Cowboys fans, even though I'm an Eagles fan, but I'll use the Cowboys as an example. If Jerry Jones was to sell a portion, let's say just to make the math right, if Jerry Jones was to sell 10% of the Dallas Cowboys at $100 million, that would mean that the value of the Dallas Cowboys is $1 billion. It's more than that, but I'm just trying to make the math work. And so every time in a private investment like that is sold, that then becomes the new sales price, just like real estate. And so could Jerry Jones get more than that? Obviously, you can. Dallas Cowboys was valued at one time at 10 billion, but it has to be more than that even because the Philadelphia Eagles, which is my team, sold off 10% of the value. I think it is, give or take, and I may be wrong, but that's okay. The top number I think was $700 million. They sold a small it may have been 15%, but nevertheless, that valued now the Eagles at $10 billion, which was one of the highest valuations based on an actual sale. So I don't mean to confuse people with to make this more complex, but alternative investments are based, the price can be valued by accountants and everything else, but the market still dictates what that investment's worth. I'll give one more example. Is Chat AI or Open AI just recently did a money raise. They raised $4 billion, sold off something like 5% of the company, something like that, valued at $60 billion. Okay. Do they make 60 billion? No, but that's the valuation and what the market was prepared to pay for that company. And so it was the largest private equity raise, I think, year to date or in history right now. And it was a small fraction of the company. And so this is the kind of money that's out there. Unfortunately, the people that could get that deal, you had to be some type of alternative or excuse me, a qualified or accredited investor to do that, to get in those kind of deals.
So how do you define alternative investments in a way that's approachable to new investors?
Okay. Yeah, that's a good idea. That's a good question. So like I said, the example I have, I'm raising money.
The people that's listening, these are the people we want to send to you.
Yeah. So again, we have to be accredited, which what that means is you have to have an income as a single person, at least $200,000, $300,000 as a married couple, or have $1 million in assets that isn't your primary home. So the qualifications are pretty high, and those are the minimums. Or it's an insurance company or bank or endowment, these kind of things. This has millions of dollars in it. So everybody doesn't qualify for that, unfortunately. However, those that do, there's opportunities out there. Your financial advisors typically aren't going to know about these or understand them because and I could say this because I've been one, worked at Merrill Lynch.
So who knows better than you?
They don't teach you that. What they teach you is how to sell their products. That's it. A salesperson, not an analyst. Don't know how to put together deals. None of that. They don't teach you that. If you learn that, it's outside of the firm, and they tell you what to sell to people. They may have alternative investments, but it's probably going to be stuff that is so diversified, so used and abused that it's going to produce very insignificant returns. In fact, you'd probably just be better off buying the mutual funds, and it's going to be high fees in it. They're just not that good at it. They can't be. They can't be as nimble as some of the people out there, and that's why you have the Blackstones and all of those out there that have acquired some of this, and people do that. And so, what I would encourage, if you're interested in that, take a look, listen. If it's for you, and if you got the net worth or the income or the capital, you can take a chance at it. Do your due diligence. We're not financial advisors. I've been one years ago, but I'm not now. I'm not soliciting to anybody to do this. It's an opportunity. And with that opportunity, you should do your own homework and due diligence and understand your risk tolerance and everything else. That's how that works. And so, but you can do your homework, and I can say that alternatives investments, most of them outperform the S&P 500. That's why a lot of the quote unquote high net worth money goes into these. And the other fact is that most portfolio managers and mutual funds, 8% of them don't beat the S&P 500, and that's even pre-tax dollars. After tax dollars, you're looking at even less of performance because you do have to pay taxes on the income that is generated, or even the capital gains that you don't even see or realize. And so that's why a lot of the smart money will go to these kind of in forms of investments.
So, why do you think these investments are vital for wealth diversification?
Great, that's a great question. One of the reasons is that it doesn't move traditionally with equity markets. Uh, Equity markets can be pretty volatile at times, and so different things can happen and spook and scare the markets, which can make your investments going up and down. And typically, you can't really predict and control the companies that you're invested into. Now, a lot of times people will say, well, Warren Buffett is this great stock investor, and he is. But believe it or not, when Warren Buffett makes an investment, he has influence over that management. He makes recommendations and they listen. If he picks up the phone and calls that executive or board or whoever, they listen. And in fact, he's got enough juice when he makes investments that he probably can get a board seat uh, when he makes this investment. So um, people try to compare themselves to that. He just has a lot more money to be able to make this, and how he got started was the same thing. He raised this back in the 50s. He raised raised money and made an investment into a company called Berkshire Hathaway, which was a textile company. And he just kept the name and made other investments. But that's the way he does it. He's a value investor, just like we are. We look for deals. We don't overpay for assets. And when we invest into these assets, we're involved with the management. We get board seats. We are involved in the projects to where we're involved in the decision making, and we help develop these assets. We have some passive plays out there, very little, but I can tell you, Charles, is that the ones in the investments that we have more control and involvement with, those are generating much more significant returns than some of the passive plays. And even on the passive plays, we got access to the CEO and call and say, "Hey, what the hell's going on?" And they'll answer.
So, with you telling, letting everyone know that they need to do their due diligence, do their homework, make sure that they can fit into whatever area this is, if they decide they want to go into alternative investments to some extent. Can you tell us that from the overall perspective, you
Mhm.
know, when there are new people that might want to try this or think about it, other than maybe like trying to, just doing some research on the industry or the market itself, what are some other things that people can do to learn a little bit more in-depthness about alternative investments?
Okay, yeah, I could try to answer that. And then real quick, another way you can get into alternative investments if you have a family member or friend that does it. So there is a clause for family family and friends that you can let people in, and you can lower it. And I have done that for a selective group of family and friends that the requirements don't have to be as stringent, but regulators will also look at that. Can't let everybody in that way, or it will look like you're breaking the rules. So I would get that out of the way. The other part I think you said is how does one kind of start doing something like this? How do they get involved with
To,
that?
to learn
To
other
learn,
those
and
other things.
what you should do is talk to people that are doing it. If you don't know any people that are doing it personally, or you don't, there's several books out there to read on people that have done or involved in private equity. Again, I'll throw out a recommendation: Steve Schwartzman, who runs Blackstone. Great read to see that. see how he started it. It's on a grand scale, but essentially the steps are the same. Uh, Talk to different people, understand a business that you want to do that in. Um, and you can't be afraid of going out there and soliciting funds to start your idea. See, I think it's a big misconception out there. The first thing we do, especially as Black folks, is that the first thing we think of is going to a bank to start a business.
Yo.
And go to the bank and get a business loan. Banks do not lend money to people who need it. I'll say that again. Banks do not lend money to people who need it. They require collateral and they require money. So they don't take any risk. And that's not what they're designed to do. And if you look at a matrix that talks about if you're a startup or anything like that, it will tell you that you got to go through the equity route first to raise your money. And then once you get big enough and strong enough, then the banks will come running to you to give you money. But until then, you're going to have to believe in yourself and sell your idea. And everybody's seen this show called Shark Tank. That's a prime example of entrepreneurs out there selling their ideas to people. And so that's what I would say. You first need to have an idea, because if you have an idea, it can attract money. It's a lot of money out there. You just have to have an idea. And it's still not hard, but it's a lot of money. It's a lot of money. Once you have that idea and start attracting money, make sure that you know as much as you can about whatever it is that you're doing and continue to build on that knowledge. I've got 20 years consulting out here, just about. And a lot of it has been in mining. Couple that with the capital market experience, the 8 years on top of that, and then some trial and error and entrepreneur stuff. That's a long time to build and grow to the point where I can do that. That doesn't necessarily mean you have to take that much time in order to get to that point to do that. You can get there a little bit quicker. There's 20 somethings out there that are doing this. Look at Facebook. Facebook started his business. That's what he had to do. Mark Zuckerberg. He didn't go to the bank and get a loan. They laughed at him. He went to venture capital. And one of his first secured venture capital investments was $500,000. $500,000. Facebook is now probably over $1 trillion company, I think, something to that extent, something crazy like that. So this $500,000 seed money that he got from a venture capitalist not too long ago helped grow and build $1 trillion company. And so think big. Don't let people tell you can't do it. Learn as much as you can about whatever business that you're going to go into. And don't be afraid to open your mouth and tell people about your idea and that you need capital in order to make it happen.
Let's transition over to growing wealth for diverse investors. Can you tell us, why is wealth equity such a critical issue for underrepresented communities?
Okay. Yeah, I thank you. And I know with underrepresented, let's just discuss African Americans. Let's just throw it out there. And I study these statistics a lot. And if I get them off a little bit, I'm paraphrasing because statistics may change but if you look at African American net worth, I think the average may be somewhere between $20,000 to $50,000 in net worth. And that's about on average compared to most maybe Caucasian people. Theirs is something like 200 plus. So when you look at, if you take out certain people out of that equation, the African Americans, maybe single mothers, things like that, you're looking at almost 5,000 or negative net worth. And so what that means is that there is a tremendous wealth gap. And I'm under this school of thought that we're not going to be able to close that gap by government. Nobody's coming to save us, people. I'm sorry. I know this will be unpopular, and I really don't care because I'm telling the truth.
That's true.
And let me ask you this. If you don't believe me, look at the statistics. Blacks, we've made African Americans, we made tremendous strides since the late 60s. But when you look at the statistics and you look at the wealth gap, it's been widening. And that's because uh, we've lost focus on certain areas. And we can achieve greatness because we have all the rights that are given to us. They may be taking some of the entitlements that we have, and there's a difference between entitlements and rights. And I think we need to focus more on economic development.
Mm.
Because with economic power, and we as African Americans, if you look at our spending power, it's equivalent to almost the fifth largest nation in the world, somewhere like that. I mean, if I'm off, apologize, but it's somewhere in that neighborhood. And so Black people have money. We have money. It's just allocated, maybe not in the right areas. And so if we flip that a little bit and start, and that's another reason my mission to get into private equity. I can have the capital to help jumpstart certain businesses later on when I build PPI. We might do PPI 2, whatever. I may can venture off into other ventures, maybe venture capital, things like that, where I can start to take a chance at some young entrepreneurs. And not only do these entrepreneurs need money, they also need experience and guidance. That's part of what you do in private equity venture capital, is that you don't just give money and passively walk away. That's why this works so much better. You also provide expertise, your network, and everything else. And again, I'm going to use the Shark Tank as an example. Shark Tank has guys that are very experienced business people. They've been very successful, and they have a tremendous network, and they have a tremendous amount of knowledge. So when you partner with these people, and it is a partnership, they don't just give you money. They expect some influence. Obviously, they want a piece of equity, but they're going to give you advice, and they're going to also open up their network to you. And so that's what I'm working to build, is a network and capital that can help jumpstart young entrepreneurs out there with great ideas and great innovation and great energy, and provide them with that expertise and knowledge and capital that they need to grow and make money for myself and investors. It's always good to do that too. It's not a charity game.
So, what financial myths still persist in communities of color?
I think, and again, I might get some people upset at this again. For some reason, we think that entertainers and athletes is the only way we can make and build significant wealth.
Ooh, Lord.
And we put so much emphasis
Mhm.
into, and don't get me wrong, I love sports. I love entertainment. I think these are great, and we made great strides there. But people, young people, anybody can be, doesn't take, you don't need to be 7 foot tall or have the ability of Michael Jordan or LeBron James or anything to get into business and do great things. You have to, you don't need uh, any of that kind of stuff. You can do that. Not everybody's going to be able to be a Michael Jordan, LeBron James, or play in the NBA. The odds are so high. It's almost, you got a better chance of getting struck by lightning. And so the biggest myth of most of the people, and not all people, and people say, well, I don't believe that. But if you talk to a lot of young kids, especially in some of these underdeveloped areas that are African American, and ask them what they want to be, they'll say, I want to play basketball, football, a lot of times. Um, some of them may say lawyers, but a lot of times that's not the case, because this is all they see. That's money. I want to be a producer, rapper. I want to be a Diddy. I want to be any of these kind of folks. And there's nothing wrong with doing that. But the chances are so great of being unsuccessful at that, that there's other ways that you can do it. And so I commend guys like Robert Smith, uh, who's the most wealthiest Black man in the country. He's not an entertainer. He wasn't a dancer. He wasn't an athlete ever, or at least not at the pro level. He's done it through uh, business and technology.
Yep.
And if you look at the Dagote, that's a Nigerian guy who's also a very significantly and wealthy man out of Africa. He owns cement plants and things like that. He's not a soccer player or hasn't done movies, internet influencer, none of that. And so, again, I think we should encourage our young kids. Okay, it's great to be. Hell, I wanted to play basketball. I had a talent, didn't have a talent. Luckily, I realized that very early. But I did start to see people that were successful in business and continue to. And so I think that's the pathway we need to keep showing those examples, keep pushing that. Don't discourage people from being able to do it, but steer them into the direction that was like, hey, look, this guy got $100 million deal or contract doing this that has nothing to do with sports or entertainment.
Mm-hmm.
Or this person is running, this consulting firm. Or this person just launched a private equity fund and made this kind of money, or venture capital fund, or all these different examples that people can be successful and wealthy in.
So, how do systemic barriers show up in investment access, and how do we dismantle them?
When you're dealing with private equity, and like I said, a big chunk of it in venture capital, whatever it is, you are raising money.
Mm-hmm.
And only as African Americans, we somewhat network, but we don't network like with a purpose. Go to galas and things like that. Go up the phone, alpha signs, all that kind of stuff. Put license plates, wear paraphernalia, and things like that. And that's great. And I wish we had these kind of courses in college, because I wish I learned a lot of these lessons as a younger man. But we have got to start networking. And that even goes with getting significant jobs and things like that. You don't interview to become a CEO of a company most of the time. You are selected. I didn't get on Pelangio's board because I interviewed and competed with people. I was selected because I was affiliated with an investment group of investors that entrusted me to be on that board. And so what I'm saying is, when you go to elite schools or any schools, you need to start building your network then. You need to start building your network even when you're in high school. Surround yourself with people that have similar goals that you do. And I know as kids, you want to have fun and have a life, but I still have friends that I had from high school that I still talk with that are looking to become investors. This is long relationships. And you have to not be afraid to tell people what you're doing and ask and help and ask for that leverage of that relationship. There is nothing wrong with that, because everybody else is doing it, and I've seen it. I've seen it at investment conferences. I've seen Irish Americans network with Irish people and use that connect. Greek, Asians, all these people are networking. I've walked campuses of Stanford University and Cal Berkeley and everything, and their group and I've talked to students on these campuses, and these people, they're hungry and they're driven. And so it's okay to have a drink and kick it and talk about sports and those kind of things, but we should also be inspiring and networking and building together. It's not about competition and me driving a better car than you, or having a bigger house than you, or nicer looking wife than you. It is about working together as a group. We are a force in this country. We are needed. Let me say that again. We are needed, and we can make an impact in organizations.
Mm-hmm.
If we begin to start to work together more and network, as I call it, with a purpose, there's nothing we can't do. And programs that we think that are important will then start to be insignificant.
Mm. What role does education play in long-term wealth building?
Great. That and that's a good question as well, Charles. Education is essential, and I don't necessarily mean college degrees,
Right,
because
right.
college or universities doesn't teach you how to be a good investor. It gives you some of the skills to do certain things as far as knowledge of different, maybe financial instruments, depending on what type of degree you have. But you have to learn through, again, talking with people that are doing it, speaking with different experts out there that really understand financial intermediaries, reading books, listening to audibles, same thing. Reading a book or listening to a book, I classify as the same thing. Um, Talking with different people, talking with people outside of your race, our race. I think it's a significant uh, influence in opportunities that you can get. And sometimes these people really don't mind talking with you. Let me say that again. They don't mind talking with you.
Mm.
They're approachable. You approach them and say, hey, I'm looking to do certain things. And um, would you mind sharing some time with me so I can tell you what I'm doing? And is there any advice that you can give me? And listening, and then incorporating their advice into whatever it is that you're doing. And then the last critical piece is that the education doesn't stop. And that even though you may have more success, perceived success than the other person, that you still can learn from others. I'll repeat that again. You can still learn from others, and you should continue to try to learn from others. I don't know if that answered the question, Charles. I think it looked like you checked out, Charles, there for a little while. So, I'll wait for you to come back on. Um, Education again. Let's say you're not in what most people would think is some type of business degree or business school or learn that. There's several entrepreneurs that have gone on to become great business people that have no business experience. Again, it's about ideas, it's about believing in yourself, it's about, um, again, not letting certain people distract you or detract you from achieving what you know and believe that you can achieve. And so many times, if people have these what some people would consider wild ideas, I don't necessarily never say you can't do it. Um, I may say or ask, what are you doing to get to that point? And if it's fluff or something like that, and you want my opinion, I said, well, it doesn't sound like you're doing what you need to do to get there. And faith without works is dead. That's correct. Yeah, God can do everything, and you can do everything through God, but you can't be lazy neither.
Mm. Let's transition over to building wealth and financial empowerment. What's your personal philosophy around money and abundance?
I think people have a scarcity mindset. They think that there's a limited amount of resources when it comes to money. But when you look at the money that's out there, again, use Blackstone as an example, $1 trillion in assets. I mean, some of these equity funds have a tremendous amount of assets. And they're looking for opportunities. There are investors out there that are looking for opportunities to grow more wealth or grow their wealth. And so what you have to do is find conduits to tap into that opportunity. And again, even if you look at the African American community, $1 trillion spending and purchasing power, uh, we've helped brands become very successful. If you look at Fox when it first came out as a network. Many programs that were catered to African Americans was on TV, and it's made billions off of that. You look at Tyler Perry, his story, a great story as well. Was homeless at one time, sleeping in his car, doing these crazy plays, dressing up as a woman, playing this character that we all know and love named Adita. Although he may get criticism, Tyler puts a lot of black actresses to work, actors and actresses to work. And I love him for that. He's been able to become a billionaire through just targeting our folks. So the money's there. And you shouldn't always just target our folks. It should be open to whatever niche market that you want to go after. But what I'm saying is it's possible. And although that's an entertainment example, you can look at, like I said, people like Robert Smith, people like a guy named Reginald Lewis. I think we'll talk about later. Um, uh, Gosh, I could just go on and on with the different people that have been. It's people that I know. A guy named Kwame Anku, who has a VC firm out there called the Black Star Fund. Very successful, highly articulate guy. I love this brother to death. He's gave me some great advice on even starting PPI and another company called MFD Holdings, which was a portfolio before us. So all these different people, I can go on and on of people that have that you need to talk to and continue to increase that knowledge and continue to learn and make mistakes and learn from them.
How do you translate technical financial strategies into stories people can see themselves in?
What I try to talk about, because the mining sector can be very technical. Okay, you got lots of PhDs out there in geology and metallurgy and geotechnical degrees, mining processing, degrees like me, guys with business degrees. Engineers, computer scientists, the list goes on and on. And I think you have to articulate and use stories and analogies that people can understand. And so when I talk about, let's say, a mineral like silica, most people won't know what silica is, maybe heard of it, or maybe not know how to mine it, may not even know really what it does. But when you say silica is turned into silicone, which goes into microchips, and microchips powers the very computers that we're talking on right now, or the phones that we use, or the cars that we drive, or any major appliances out there, people start to see and connect the story. You talk about a company like Nvidia, $4 trillion in market cap. I remember when that company came out in the early 90s, or the early 90s when it was founded, in the mid 90s when I first started working in capital investments, and they make mainly graphic chips. And now with AI, they're dabbling into that and getting involved in that. It's brought a tremendous amount of wealth there. And so what I try to do is articulate stories that people can understand, not get too technical unless they need to, and get them to the point. I don't want to talk down on people. I want to talk to people and tell them this is how this works. When we develop a mining asset, have you ever seen a subdivision? This is an example that I use. You ever see phase one? They go, yeah. Well, phase one, you get into a house and then you buy into it. And then phase two comes out. And then in phase two, you spend more money because the developer has already he may even discount that a little bit just to get people in. And now the neighborhood is getting up and running, it's getting momentum. Phase two comes out. Now they charge more. And then when phase three comes out and they're about to finish off the neighborhood, phase three, people that buy into the neighborhood pay significantly more. That's how it works in venture capital or private equity. Once you get some stride, you now have more value. You can then sell your idea to more people at a higher price. And so the people that come in at the founders round or whatnot. And typically as African Americans, we don't get those offers. That goes with, again, who's in the network. And if we're not networking or networking with these particular individuals that are doing this, you're not going to be involved, or we're not accredited investors, all those kind of things. So now round two comes out, you charge more, and then you may do a third round, you're raising more. You still can make money coming in after that because people do IPOs, right? Or people have bought companies like Meta after it's gone public and still have made money. You're just not going to make the money that the VC company that started when nobody would have done it, invested the $500,000 into Facebook, and has grown significant wealth throughout that time. In fact, I'll make one other ad. When you look at venture capital actually knows they're going to fail. They will make 10 bets into different companies. Now, private equity is not like that. It's a little different. But venture capital will make maybe 10 bets. And they're hoping that 2 will be successful. 1 may skyrocket. 1 might break even. The other 7 will fail. That's their model. That 1 will do so well that it'll make up for all the losses. And how many people are going to invest that way? That's a loss. I got a failure. I'm never doing that again.
Right. That's what I was going to say. That sounds like that's a little crazy, but I do understand the philosophy and the theory to what you're just saying. So is this kind of like, and I may be wrong, I guess, with this analogy, but is that like put out there to like, let me just bring you in, and unless you get maybe this part, you probably gonna get everything here, but everything else that's out there is just out there, and we'll just see what it does. But this where everything is. So it's kind of like, just come and do that.
No, I mean it's rigorous due diligence done. Just everything's not going to work.
Right.
If you look at even Thomas Edison, he had several failures before he actually was successful. Walt Disney, bankruptcy several times. People told Walt Disney people said he wasn't a creative person. Can you imagine that? I mean, I can go on and on with these stories. The thing is that if you know and have a methodology and an approach, and you believe in it, you can be successful at it. And there could be some failures. Even in PPI's model that we call MVMP, minimal viable mining process, which is part of our methodology and how we do things, we plan to have what we would call 15% will be shrimp. And what is a shrimp? Break even or losing money. But we plan to have 15% that'll be whales, which is 5x plus. Another 30% will be a shark, which is 2x to 5x. And then maybe about another 30% or so, 40%, and the math may not add up because I'm not looking at it right now, will be fish, which is our 30% target that I have in that pitch to people right now. So I'm being conservative, even showing that, but I'm comfortable and confident I can deliver that because I know that I'm going to get some whales.
Right.
And the way this market and in the mining sector has been with some of these things that are happening and that people are waking up, we're seeing tremendous opportunity here.
So what's one common mistake that stunts early stage wealth growth?
I think, again, like I had mentioned, Charles, people lose money and say, I'm never doing that again. And they don't learn from the mistakes. You're going to make a mistake. And that's why with alternative investments, you need to be accredited because you got to be able to afford to make that mistake. I don't want people's light bill or mortgage money or nest egg or savings or emergency money. I don't want that. And I'll tell people that I need, these are long-term investments, typically up to about 5 years. And so the biggest mistake is making a mistake and then saying I'm never doing that again and get out of the game. We got to be in the game and participate in the game in order to win. You have to, when you play a game, right? What do? You practice. You work on your skills. You use coaches. You use experts. Let's say I'll go to athletics. You get cooks. These guys got cooks and eat right now. If you're an entertainer, you make sure your body's right because that's what you're selling. You get different things done to your skin and all these haircuts, whatever. And so you need to always be sharpening that blade, like the analogy I used at the beginning of the program. You got to constantly be getting better and better because there's going to be competition out there that's going to be as innovative in doing things. And so when you stop innovating and you stop learning, you die.
Ooh.
Sears
Oh,
Roebuck.
yeah.
Have you ever heard of the company Sears? See, you laughing now. See, Sears
You're
used to,
right.
Sears used to didn't be a joke,
Yes.
ladies and gentlemen.
Yep.
Sears at one time was the largest retailer in the world and employed more people than any company in the world.
Ooh, my grandmother swore by them.
They built the Sears Tower, which is now the Willis Tower,
Mm-hmm.
but they lost their way. They stopped innovating themselves. Sears used to have a catalog that people would buy out of.
Yep.
I remember my grandfather would take me to Sears every Easter and buy a suit for me.
Mm-hmm.
People actually used to shop at Sears to get clothes, ladies and gentlemen. Now you ask some of the young people, they be like, Sears, what's that? No, I'd never been there before. I heard my grandfather talking about it. Or in my case, I'm 52. I bought tires from Sears. Even once I was in my 20s, you didn't go to Sears to get clothes no more.
Right.
So that's an example of why if you're not learning and continuing to learn, you die.
Yeah.
In anything you do, you become obsolete. Nobody's coming to save us.
Let's move over to creating opportunities for future generations. When you hear future generations, what responsibility comes to your mind?
May you repeat that again? I'm sorry, I was drinking water. I'm sorry, Charles.
When you hear future generations, what responsibility comes to your mind?
I think it's a responsibility for people like me now that I'm getting to become an old person. I never thought I would, but my body tells me this every day when I get out of that bed or if I do some kind of exercise. It reminds me clearly that, hey, man, things are changing. I used to run 2 or 3 miles for breakfast, not anymore. I got to stretch and do all those things. But I think it's responsible that we share our experiences. Don't push it on to them. Don't lecture, but share it. Be accessible. When younger folks reach out to you, and I always do, and I'm willing to talk to people all the time, share some time with them. Everybody has 15 minutes to a half an hour, I think. Even the president of the United States, what's important to him, can spend 10 to 15 minutes with someone sharing something. And so be accessible, be humble, show the work ethic, explain to this generation there, and try to leave some type of legacy to the young people so we can make it easier for them, just like my parents did for me, and then ancestors that have made it easier for us, people that have fought for true civil rights so we can have the opportunity, so a Kamar Jones can dream and dare go into capital markets or be in management consulting or to be a military officer. All of these things that we at one time couldn't do, and it took people to break down barriers and bust through glass ceilings in order to get there. We're now CEOs of companies. We're board members. We're leading private equity and venture capital companies. We're leading technology companies. We're in think tanks. We're presidents. We've done that. We're politicians, all these things. And so don't lose sight of that, but we should continue to build that and don't expect anybody to save us again because
Mhm.
that'll distract us from getting where we truly can go and go much faster and do that. And so that's great and fine and dandy if that happens. Okay. I'm not going to turn it down. I'm not. But if we don't see what's happening now, I think people are saying enough. And I'm saying to other people. And we got to read that message. We got to read that message and realize that it's game time now. And we got to take the tools and everything that we have. And there may be some that'll fight still that good fight, but we can't depend on it. And I refuse to depend on that at this point.
Ooh, you're absolutely right. What infrastructure do we need to sustain generational wealth transfer?
Great question again. Build and become owners of things. Ownership is what leads to wealth generation. Own your home, things like that. Even though I sold mine and dedicated a lot to PPI because I could take money from that asset and and build this. And then my lifestyle changed a lot significantly. I don't have a big as large of a family anymore, something like that. And I may do that again, but it wasn't putting any money in my pocket. Um, Focus on assets. Don't focus on impressing people. Yeah, it's great to have all the toys, and all those kind of things, big house, big cars, but keep the focus on assets that pay you money, that builds equity in because that's going to take care of you and take care of us and leave something, a legacy. Um, and you have to know the difference between assets. Assets, and I quote Robert Kiyosaki, who's wrote the book Rich Dad Poor Dad. I've read that before. He
Mhm.
talks about buying assets, and assets are things that put money in your pocket. He said it plain and simple. And so a car may be considered an asset to the bank, but it doesn't put any money in your pocket. A big expensive mansion is an asset to the bank, but it doesn't put any money in your pocket unless it's some appreciation. But it's not a cash flow. It's not an investment like stocks and bonds, things like that. And
Mhm.
so focus on that, and you will achieve financial well-being. It's a guy named Brian out there. I've been listening to him, and he talks and focuses on people trying to get to that point. He doesn't necessarily deal with just accredited investors. And so I would encourage people to look him up and listen to what he's talking about. And he has, and he comes from South Central Los Angeles, and he's been able to build a tremendous amount of work from nothing. So people like that, talk with, train, get their story, keep sharpening that blade to get better,
Mhm.
and focus on assets, not liabilities, not stuff that you're trying to impress people with. Because in the end, why are you trying to impress people that don't like you?
Ooh. Ooh. Ooh, boy. Mm. You can't tell nothing but the truth. You can't tell nothing but the truth.
We do it. We do it, and we got we're the fifth. We're like a nation. African Americans in the U.S. Stop trying to impress people. It's
Yep.
okay. Let's impress them through becoming an economic power, gaining respect and everything else, where we can actually make a difference.
Yes, sir. Yes, sir. How do you involve youth in financial conversations and legacy planning?
Yes. Um, what I try to do with youth, and I haven't been speaking with the kids too much lately, but when I have, or if I go to talk to schools or things, there's these cards that, gosh, I can't think of his brother now. Gosh, it's not going to come to me, and and I apologize to the audience if not because uh, of not remembering his name right now, but he has these cards that talk about stuff like what credit scores are and all these kind of things, financial literacy. And so, what I try to do if talking with youth is to share what is financial literacy, you know. And what that means is that's not taught in schools a lot of times. How with the difference between buying a car at 30% interest as opposed to 5% interest, uh, managing your credit, which, by the way, if you go into business, a lot of times you may mess that up. That's part of the pain that you may go through. But for those that aren't doing that, you should be able to manage your credit if you're working. And so you don't get it overextended and you're trying to impress everybody and end up putting a lot of pressure on yourself, not eating right. Um, all of these kind of things, because that's also, you need to take care of your body too. A good sound body makes a good sound mind.
Ooh.
And that's why in the military, you do running and being in shape because it makes you a better soldier, makes you being able to make decisions when there's pressure. And so a lot of times in our community, we have high diabetic rates, which I am. It's a lot of genetics, but I still weigh what I weighed when I was in my 20s, in my early 20s. And that's been done deliberately because I want to be able to play with my kids and grandkids when they get older and see them go off to college and all these kind of things. And so I talk to youth and say, you can do it. Don't let anybody tell you you can't do it. Try to learn from others. Listen to people who have experienced these things. It can save you a lot of headaches and heartaches. And strive for greatness. Our
Um,
people are great. We can do, and we're needed. That's the thing that I tell people. We are actually needed. You ain't got to beg and say, "Hey, please accept me." No, we are needed in business, and they need that purchasing power.
mhm.
If you take that away, that's a lot of money gone, and that'll sink a lot of companies.
What role does mentorship play in breaking cycles of poverty?
Yeah, mentoring and mentorship, and I would encourage everyone to seek out and get mentors. Mentors in business, mentors in relationships, how to be a better husband, how to be a better wife, how to be a better partner, all these kind of things, how to be a better person, how to be a better employee, how to be a better soldier if you're in the military. Uh, it allows you to talk to people that you can trust. You can't talk to everybody about what you're trying to do because everybody don't like you, and it's
Right.
okay. Everybody ain't pulling for you. Even us, we ain't pulling for each other sometimes.
Mhm.
Unfortunately, what's that? The all skin folk ain't kin
Also,
folk.
oh, that's right. That's right.
I ain't got a tie on right now, and I'm relaxed. And thank you, Charles, for letting me. So seek out mentors, converse with mentors regularly, share goals and aspirations with them, share failures, share different things that you're presenting to people, practice with them, and listen to their advice.
So let's
Yeah, my partner that's got me, and we known each other in the mind. He's younger than I am. He's
mhm.
brilliant, and he's learned some things from me, and I've learned some things from him. And if I was the type of person that said I can't learn anything from, I was he was my client actually. So I
Mhm.
was consulting him, and we built that relationship and trust.
Let's move over here to your community outreach and cultural responsibilities for the things that you do there.
Mhm.
How has community outreach shaped the way you do business?
Well, one of the things that inspires me to be successful and to build wealth is so then I can be a generous giver.
Mhm.
It's kind of hard to be a giver, man. And if you live in paycheck to paycheck and you got that light bill to worry about, trust me, I've been there before. I ain't embarrassed to say it.
Mm-hmm.
So it takes wealth in order to do that. And so one of the charities that I'm involved in is the Delta Gamma, or the Alpha Phi Alpha Delta Gamma Endowment Scholarship Fund that's at Alabama A&M. And I've been proud to be involved in that. I'm a founding member of the endowment fund, and I've been involved with raising hundreds of thousands of dollars for this organization. And our goal is to get to 1 million within a certain time frame. And these kind of things gets me connected with people that can make invest or donations, the right people that can do this. And if I'm building wealth, then I can make donations as well and encourage my friends and network to do that. And this could make a real impact, because what we're doing is enabling privileged people to be able to get a college education. And that's part of the requirements, or not the requirements, but the guidelines, is that these people don't have necessarily the resources to do that. 80% of students at most HBCUs, and I'm a proud graduate of an HBCU, Alabama A&M University, my undergrad. Most of those people are dependent on some form of financial aid. Mm-hmm. And so if we're not donating to our universities, if we're not building endowments and supporting our own endowments, how do we expect others to do it?
Wow, that's a great question.
And should we expect others to do it if we don't support?
Exactly.
It's kind of hard for me to go out there and say, hey, such and such, can you put money into this endowment? And the participation with our folks is low.
But I'm sorry, but just when that's said out loud, well, I'll just tell you this. The humorous part about that to me is the fact that it's like what they say, the definition of insanity is to do the same thing over and over again and expect a different result.
Amen. Hallelujah.
That's what that's like.
Amen. Yes. And again, it's not to be harsh or critical. And sometimes as African Americans, man, we give, when you have a startup, and PPI we're not necessarily a startup anymore. We've got some organization and infrastructure, but man, I'm not going to look like Blackstone. I don't have trillions of dollars under management, so don't hold me to that standard. Right. And so when it's Black institutions or businesses, don't hold them to the standard of Coca-Cola or these other people that've got all these resources and talent and everything else.
Exactly.
And actually, let me share another secret. Venture capital PE firms that do make these investments don't expect these startups, whether they're even being started up by Jewish, whites, or Asians, or any of these folks. They don't expect you to have all the answers. That's why they're there to give you advice and offer their network so you can grow and become that.
You're right. Exactly.
Zuckerberg wasn't the guy he is now. Michael Dell, all these people that have founded and grown billion-dollar companies didn't have it going on like that. Steve Schwarzman made a lot of mistakes that Bill Blackstone.
Yes.
Robert Smith had to learn.
Yes.
Reginald Lewis had to learn. So let's be realistic and stop being so overcritical to when we do, well, they didn't have this, or that website didn't have that, or the website went down. Oh, I want, or hey, this bank is that bank failed. I don't think we should do that no more. Let's stop this. Failures, if we ain't failing, then we're not trying. And I want to see more failures, because that means there's more attempts. Mm-hmm. You can get into the Hall of Fame batting 300. That's 3 out of 10 at-bats of getting a hit. That's 7 failures, but you're in the Hall of Fame.
Yep.
Michael Jordan missed most of his shots,
Yep.
missed most of his game buzzers.
Yep.
Hall of Fame, arguably the greatest player of all time.
Mm-hmm.
Keep that in mind.
What is one moment in your community work that changed you?
I think, gosh, that I'm getting old, man.
You ain't that old.
What changed me with community service? I think seeing the impact that it has, the aftermath of, and I've always been involved with scholarship, and I like to promote academic excellence.
Mm-hmm.
Someday I'd like to get a PhD. It's not going to necessarily make me more money or anything like that. I want to show to my grandchildren out there that academic excellence is important to me.
Setting a standard.
Yes, leading by example, being a role model. And so what changed me is seeing the impact that some work that I have done in charity help inspire somebody to do something.
Mm-hmm.
People have come to me that I didn't even know, said, "Hey, I saw this that you did, and I'd like to do that. And can you help me or give me some advice?" And then they actually reached out to me later and said, "Hey, I've got this done." I have a fraternity brother years ago, and we talk, and he's now my legal counsel, um, that have just added to the team. And I remember I was investing in the real estate, and he hadn't done that yet. And then later on, using my advice, he said, "I bought my first rental property." And then he increased it to like 5 or 6, and then he divested it later. But if he's listening, he knows what I'm talking about. That makes me feel good that something that I did can leave a long lasting legacy to impact someone's life.
Mm-hmm. Oh wow. So, before we got on the show, the one thing I reached back out to you and I was asking you in about Black History, because we do Black History 365.
Yeah.
And I ask you, who is the most influential person in your life and your career? You mentioned Reginald Lewis.
Yes.
And can you tell us what makes Reginald Lewis a defining figure in your life and career?
Okay. And I'll tell a story. I like telling stories when I'm explaining things. There was one time I was delivering pizza for Domino's Pizza while I was in college, and I was a senior in college delivering the pizza, and this young brother, he maybe 3 or 4 years older than me. He recognized me. I knew his girlfriend, and he said, "Hey, I want to share something with you." And he told me about Reginald Lewis, and of course, I never heard of him. And he gave me this book. Why should white guys have all the fun? And it was the first book I read that was a business book that was focused on an African American achieving great things in business. I had read business books before that, Lee Iacocca, and Who Stole My Cheese, and some of these other things, just to name a few. But I never read an African American in business that done something. I even read Malcolm X, stuff like that. But those were civil rights and that kind of stuff. And what I learned from Reginald Lewis, here's a brother. I'm an alpha. He was a kappa. I give kappas. I give you noops. I got to give you your props on that. This was a great man. Went to an HBCU in Virginia State. Was on athletic scholarship. Played football, and wanted to not inspire to to be in the NFL. He wanted to be a lawyer and then go into business. And he wanted to go to Harvard Law School. This guy was so sharp and able to network. He talked to some people. He visited Harvard and talked to the right people, and they admitted him into their law school without taking the LSAT.
Wow. Get out of town.
He got into Harvard Law School without taking the LSAT. Okay grades. They seen something in him that obviously that he may not have even seen in himself. So he graduates Harvard Law School, has a law degree. None of the major firms will hire him, of course. This is the late 1960s, early 1970s. So what he does is he starts to increase his business acumen. He's doing some law professorships and stuff like that so he can make ends meet, but he ultimately wants to play on Wall Street. And so, to make a long story short, he gets to the point where he puts together a deal and buys this textile company, ironically, sewing machine company is something he buys, raising money, and he does it through what's called an LBO, which is a leverage buyout. You use bonds to purchase a business through leverage, and then the cash flows and everything from that business pays the bonds off. And then at some point, you sell that off and make a huge profit for yourself and investors and bondholders. It gets better. And that was like a $30 million deal sometime back in the early 80s, something like that. So he then does some other things and he owns this company. He's making money. He becomes a multimillionaire, obviously, from that. And he inspires to buy this food company. He knows a gentleman named Michael Milken, who was the junk bond king at a time, and he's talking to Milken. And some bad things happen to Milken, but he's also done some good things. And Milken tells him, well, Reg, when you get serious, let me know. And Lewis was taken back. Ain't that? And I'm presenting some kind of a deal. So he thinks bigger, comes up with this food idea. And Patrice Industries, a global conglomerate of different foods, South America, North America, Europe, Asia, all these kind of places. And he pulls off the biggest at the time LBO in history. Not for biggest LBO for an African American. No, biggest in history. $1 billion back in the late 80s. He pulls that off and makes history. Some of the bigger guys out there, the KKRs and everything, was wondering how the hell did this guy do this? And he outbid all those guys. Mm-hmm. And so his book talks about his journey. And these are the guys that a lot of times people don't know about because he wasn't a civil rights leader. He wasn't, maybe a great general or any of these. See, our history is beyond just slavery and Jim Crow.
Yes.
We had, people don't know about that in Africa, that was a lot of wealth built there. And that places like Timbuktu had a university that had 30,000 students way back in the Middle Ages, and that they were actually knights in some of these civilizations. And a lot of great things, and that Moors actually ruled most of Spain. And all of these sorts of things that happened well before colonialism, slavery, and Jim Crow. And so I would encourage people to understand this and learn about people like Reginald Lewis and others that were in business in other areas outside of just civil rights, athletes, entertainers, those kind of people that we all know about. And so he's a hero to mine. He inspired me. He reconfirmed even more that going into Wall Street was a good idea. And that if a guy can talk himself into Harvard Law School back in the late 60s, man, maybe I can do something in life. And then pull off the largest LBO in history at the time. Man, that's greatness.
How do his philosophies align with your own vision for entrepreneurship?
He didn't listen to people that told him he couldn't do it. If anybody, can you imagine with Reggie or Reginald Lewis, we talk to people, I want to go to Harvard Law School, and he's going to Virginia State. Can you imagine people probably even laughed out loud at him? Are you crazy? Well, you're not a rich person. Who went there that you know? Man, they ain't gonna let you do that. All those kind of things that he heard. So Reginald was had a tremendous work ethic, and he didn't have or come from money or an influence that he can leverage and say, this got me here. He made things happen, and he was persistent, and he got it done. And he always strived for greatness. Unfortunately, his life was cut short shortly after this big LBO. Um, However, the legacy he's left still exists today. And
Oh,
so
wow.
I think of him in the obstacles that he had to come across and that he still got it done. And he was had a tremendous work ethic in order to achieve this. And he didn't let anybody stop him from doing and achieving his goals.
Last question. What do you think his legacy teaches us about resilience, ambition, and impact?
I think it speaks for itself, Charles. I think it speaks for itself. Persistence in getting into Harvard Law School, not taking the LSAT, not having somebody donate millions of dollars to some foundation and get you in, impressing people that let you and gave you that opportunity, going further than that and not just settling on professorship or things like that. Could have made a great living off of that, done great things, but inspired to play with the Titans,
Mhm.
putting together his own deals, making his own contacts and networks, striving to do big deals, competing against major private equity firms at the time and venture capital and all those in order to buy distressed assets to generate significant wealth for himself and others. Um, Not using or listening to limitations. At the time, that was the largest LBO. He couldn't have been limited in his thinking or saying this is too big. No one's ever done it before. And so, reading that book as a young man, reading several other books, there's been other influences, but that was one of the most significant in Black history that I've ever ran across at the time, and is very, how should I say it, um, not talked about much. Should be a movie about this guy.
So, in closing, what are some words of wisdom, some things you like for our audience to know as to this wonderful subject and topic that we spoke of, or about yourself, how they can connect with you on social media, how they can go to your website? What are some of the things you want them to know?
Well, what I want them to know is that I publish a newsletter, a quarterly newsletter, and I may do another publishing that comes in between that on a monthly basis. Um, Look up PPI Capital Limited. You'll see that. You'll see a black logo. You'll probably see me in posts that I make. Please, I encourage you to follow that business. Feel free to reach out to me if you want to connect with me on LinkedIn. I connect with everybody on there. I want people to hear my story. I want people to see what I'm doing. I want to network with people and expand that with all types of people. It doesn't matter if you're just getting started in a career or you're very experienced and board members running your own company or corporate executives. Uh, I'm here to network and expand knowledge, and let's share. Um, there's websites that once you connect through through me on LinkedIn, you can see all these various websites. You can start to follow me. I'll connect back, I promise. And you'll see some of the things that we're doing and how we're growing. And I share insights on certain investments that we make. And I share insights on what's happening in the junior mining space during the time. And so uh, that's what I would say, Charles. If you want to know what I'm doing, you want to speak with me, um, let's carve out some time, and I'll share some of my experiences. Again, I'll share some knowledge if I can, and stuff like that. And I'm not that busy to where I can't share insights or some time, 15, 30 minutes. I'm not that busy, guys. I don't think I'll ever be that busy where I can't share words of wisdom or give people encouragement or share ideas or network or those sort of things. Accredited investors, if you're looking for an opportunity, we have a unique offering. Everybody can't do this because it takes a lot of expertise and knowledge and infrastructure to make money in the junior mining space. And so I would encourage you to look and see what we're doing. If you want to speak about it, we can. Again, this is not a solicitation, it's an opportunity. And if you want to diversify assets, your portfolio, and you are in this area, we can talk. It's not high pressure because, again, it's an opportunity. I'm used to people saying no. Those is what's part of the business. But what I can say is that currently, the portfolio is up 5x since October 2024. I got to pinch myself when thinking about that. A lot of that is attributed to one of the private holdings we have, um, and some of these private placements that were made that we're involved in. The team is doing a tremendous job increasing the intrinsic value of these assets. It amazes me the work and dedication. My partner's now in Morocco right now, in boots, out there checking on a lot of this stuff. And he's been able to increase intrinsic value on the sister portfolio by means that is beyond my wildest dreams right now. And so I'm glad to be part of that story. I'm here, I'm available, I'm accessible. Thank you all that are listening to this. Thank you. Thank you, Charles, for having me.
Yes, sir. I want to, first of all, I want to thank you for being here because I think the information that you just provided um, is more than adequate and thought provocative enough to have people to think enough about, changing some things in your life. And if, you really want to get into this point of moving into the market in a different way,
Mhm.
then, I think it's more than worth checking out. I am very, very, you just, I'm very, very happy to hear some of the things that you said because, you know, um, in knowing finance, I mean, that's one thing I can honestly tell you. I had no idea about the alternative part that you were just speaking of. I had no idea about that. I really didn't. But it's intriguing enough for me that I will tell you that I myself am going to be looking at that because that sounds like something to really diversify with. But I just like to thank you, and hopefully we can have you back again because I definitely would love to have you back on the show. For those of you that were watching the show tonight, you definitely got to learn some things that Kamar was talking about his company, what they do. I think it's more than worth giving it the opportunity of looking and just seeing exactly what goes into doing this if you're trying to diversify your portfolio. It's worth learning because if you don't know, then you can't speak on it. If you think that is more intriguing to you where you want to learn about it, please do it. But I also recommend that in the process of doing that, please try to connect with him and ask those questions as you're doing that research, because I think it's twofold to where it actually helps you to get that much more of an understanding as to what it is that you're thinking of doing. For those of you that are watching on the YouTube channel, I'd like to thank you for watching. But if you have not yet, supported us by subscribing and getting all of the notifications, I would appreciate if you could just support us by doing that. because once you subscribe and get all of the notifications, you're able to get all the shows live, but you'll also get all the notifications, that is, when there's postings on the channel, as well as what's up and coming and what's new, what's about to happen. I want to thank you all for that support, but also I want you guys to know that there's going to be more and more starting tomorrow, as well as on the channel, where you're going to learn a whole lot more about the first edition of the magazine, America in Black and White, which will be out on August 8th. That's the official release date. And what you guys will find in that is that all of our guests that are here for the month of July will be featured in that magazine, as well as a lot of articles. There will be some advertisements, but there's a lot there for each and every individual, because you'll get the opportunity to go back and learn a whole lot more about all the guests that have been here on the show. So I want to thank you again, Kamar. I want to thank everybody for watching. We have another great show tomorrow night, and I welcome you all to come back tomorrow night and watch us on America in Black and White as we color conversations on America's canvas to continuously to build communities around this country. You all have a great evening, and we will see you tomorrow night.
Thank you, everybody.